Hey YouTube, this is the Robinhood Investor. Hope you had a great day of trading. As always, I really appreciate your support, so if you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. Today I'm going to talk about Twitter's earnings reports. Earnings reports are important to follow because they provide insight on historical performance, typically on the previous quarter, and future guidance, which includes information a company provides as an indication or estimate of its future earnings. Twitter reported earnings before market open today, which caused the stock to dip. So let's go to Twitter stock, ticker symbol TWTR. And as mentioned today, it dipped 9.84% and 0.49% after hours. So overall, a little over 10% today. Past week, down 8.83%. And as you can see, it dipped after earnings report. Past month, down 3.31%. Past 3 months, down 9.19%. Past year, down 10.25%. Past 5 years, down 53.5%. Scroll down a bit. Let's take a look at the statistics. So 52-week high is $47.79 versus 52-week low, $26.19. Current price is $30, so it's a little on the lower end of the 52-week range. And in terms of market capitalization, it's $25.98 billion. P/E ratio is 22.8. And no dividend yield, which means they're reinvesting all profits back into growth. Let's look at the earnings report. So Twitter beat by 6 cents and beat on revenue. Q4 non-GAAP earnings per share of 31 cents, beat by 6 cents. GAAP earnings per share of 33 cents, beat by 18 cents. Revenue of $909 million, up 24.3% year over year, and beat by $42.28 million. So overall, very positive earnings report just based on these numbers. But let's see why it dipped today. So this is due to weaker revenue and higher costs. So its lowest point in over a month after sales forecast fell short of expectations, and the company posted lackluster user growth. So even though it met expectation, it seems like future guidance and performance is not going to be doing too well. Company topped expectations, and its first public report of average daily active users showed a year-over-year gain to 126 million users from 115. It also said it would phase out reporting of monthly active users, which fell sequentially and year-over-year to 321 million users, preferring to focus on monetizable daily active users. So they're shifting away from reporting monthly active users to monetizable daily active users. And I heard from Bloomberg's report where they're focusing on this updated way of reporting just to align how they focus on the metrics internally with how they report to the shareholders. So by aligning this, it's a similar reportable. And on the earnings call, management said expenses were likely to rise due to the importance of investing in platform health and easing conversations. CEO Jack Dorsey pointed out to 4 key focus areas: promoting healthy conversation, making the platform more conversational, making it great for advertisers, and focusing on technology. So by focusing on these 4 areas, they're engaging users as well as advertisers, and hopefully this would generate more revenue. So let's go to tip ranks. So current price is $30.80. In terms of analyst ratings, 6 analysts recommend Twitter as a buy in the last 3 months. 6 recommended to hold, and 2 recommended to sell. So overall, it's a moderate buy based on Wall Street analysts' ratings. Next is average price targets. So average price target of $34.31 with 11.4% upside. And on the low end, it's $24. On the high end, it is $44 per share. And this is for the next 12 months. That's all for this video. Which stocks are you looking at? And which earnings reports are you following? Comment down below. If you like this video, give it a thumbs up. And if you want to learn more about investing, subscribe to this channel. See you in the next video.